another day to do business. Welcome to 55 minutes of current and relevant business talks. I'm Ini John Mekwa, and this is Business Morning. We start as usual from the global space, where oil prices rose on Thursday, pressing for a 5-day losing streak on signs of steady demand in the United States, which is the world's biggest oil user, though the prospect of U.S.-Russian talks on the Ukraine war eased concerns of supply disruptions from further sanctions. So let's look at the numbers now. It's green, about 0.5% for Brent. That's in, and bring it up to $67.28, even though when you compare it to about this time yesterday, we know that Brent was about $68. It's dropped, even though a bit of recovery recorded there. WTI is also in the green, 0.57%, bringing the price to $64.72 a barrel. Now, Trump could meet with Russian President Vladimir Putin as soon as next week, according to White House official, though the U.S. continues preparations to impose secondary sanctions, including potentially on China, to pressure Moscow to end the war in Ukraine. Still, oil markets are being supported from a bigger-than-expected draw in the U.S. crude inventories last week. President Trump also says that he could announce further tariffs on China, similar to 25% duties announced earlier on India over its purchase of Russian oil. With planned OPEC Plus output increases weighing on prices, WTI will likely remain in the 60 to 70 range for the rest of the month, and that's referring to the Organization of Petroleum Exporting Countries and its allies. They met over the weekend. So OPEC Plus and Russia, these are the factors driving oil prices this morning. Meanwhile, in Nigeria, the Upstream Petroleum Regulatory Commission, NUPRC, has published the current concession status of 243 oil blocks in Nigeria's upstream sector, confirming that no asset under its purview has been abandoned. According to a statement released by the Commission, the disclosure is part of its efforts to enhance transparency, foster accountability, and ensure responsible management of the country's hydrocarbon resources in line with the Petroleum Industry Act 2021. The NUPRC clarifies that all listed blocks are under active regulatory oversight, with each asset either in production, under development, or in various stages of exploration. It also emphasizes that operators are being closely monitored to ensure compliance with technical, operational, and environmental standards. Commission Chief Executive Benga Komalafe notes that the publication is aimed at addressing misinformation and speculation around the status of oil assets in the country. He adds that the regulator remains committed to open data access and improved investor confidence in the country's oil and gas industry. Well, let's leave oil and gas for a bit. The Economic and Financial Crimes Commission, that's the EFCC, they've launched a sweeping investigation into Nigeria's real estate sector over growing concerns of money laundering activities. The anti-graft agency says that the probe is aimed at unmasking individuals and corporate entities using real estate deals to conceal the origins of illicit funds. According to the EFCC, real estate has become one of the most common channels for laundering proceeds of corruption, drug trafficking, and other financial crimes. The Commission notes that while property development continues to thrive in major Nigerian cities, especially Abuja, Lagos, and Port Harcourt, there are many suspicions that many high-end property purchases are being funded through illegal means. The EFCC has also warned estate developers, agents, and professionals in the sector to ensure strict compliance with anti-money laundering regulations or face sanctions. I guess this follows the conversation we had yesterday on Business Morning, where the Institute of Mortgage Brokers and Lenders of Nigeria said that members are concerned about that report of real estate sector being used for money laundering. This concern follows the revelation by the Independent Corrupt Practices and Other Related Offences Commission, that's the ICPC, of significant recoveries of properties from public officers, including 241 houses from one individual and 60 buildings from another. A member of the governing council of the Institute, Dr. Bernard Doro, was a guest on Business Morning yesterday.
We have been talking with the EFCC and working on a MOU to be able to achieve this. We're also talking with ICPC. We are talking with the police we're working with the practitioners themselves and trying to bring everyone into the firm so that we can all join hands. So obviously, working with the ICPC, EFCC, and the police, we can then be able to synergize and ensure that the sector is cleansed of the use of illicit funds, and also, you know, through the housing sector. I mean, statistics are there to back that up, and we see that it's a huge problem in money laundering and also terrorism financing. So I'm sure the collaborations that we are doing currently with these relevant agencies will help us to sanitize this industry. And once we do that, I'm very sure that has a direct link with the entire sector, and will be able to bring the sector into compliance, and also such that you know, we can build affordable houses, and that's the point I keep emphasizing.
Let's look at an industry that used to be a pride of Nigeria. Unfortunately, it seems we have lost that status. We're talking about the textile industry. Looking straight now to the cotton and see what's happening there, because by 1970s and 1980s, Nigeria's textile industry was the third largest on the continent. However, the story changed during the dissolution of the Cotton Marketing Board. That happened in 1986. In spite of that, we still have cotton being grown in 36 states of Nigeria. The country produces around 13,000 to 15,000 metric tons annually. However, yields have remained low, ranging from 0.6 to 1.5 tons of seed cotton per hectare. Nigeria now is a net importer of textile. Isn't that bad news? Well, according to NBS, Nigeria's textile imports have skyrocketed by nearly 300% in the last 5 years. The value of imports rose from 182.53 billion in 2020 to 726.18 billion in 2024. This is good FX that would have been used for something more or better. So let's delve into this now with an individual who is very concerned about this and had some good comments for President Bola Tinubu. So we'll find out if he's political or not. We have right here in the studio Ms. Ololade Adeneye. She is the national coordinator of the Nigeria Cotton Society and also the managing director of House of Dorcas Integrated Services. Joins us right here. Ms. Adeneye, good morning and welcome to the program.
Good morning, and thank you for having me again.
Good to have you. So when I saw your statement, you know, praising the administration, I was like, is this political? Is this subjective? So maybe you should convince us.
Thank you. It's not political. You know, it has nothing to do with politics. You know, I'm not a politician. I'm only a business person. And apart from that, I advocate for Nigerian economy. I believe so much in the Nigerian economy. You know, I see our potential. And I, for one, I've made up my mind, you know, to put in my own bit to make this work. And when you see what is working, let's say it is working. You know, I believe strongly in building something sustainable. You know, I don't believe in, you know, we want to cultivate today, we want to harvest today, we want to sell today, we want to make money today. It doesn't work like that. You need to build a system. And what this government is doing, they are building systems in place. You know, I understand that the people on the street want to see the result like yesterday. We all want to see that. But you can't get results like yesterday. You know, like they always say that Rome wasn't built in a day. We've come a long way, you know. We're still going to take some steps to get things right. But I can see the structure they're putting in place. I can see the system they're putting in place that will put us in that line where we need to be. So that's why I say that I like what the government is doing. I, for one, as somebody that is in this space, I can see how we can do well, you know, long term.
So I guess one of the reasons you have this perspective is because of the Cotton, Textile and Garment Development Board and the 90 billion naira. But we've had very impressive announcements and policies, you know, before now.
Yes.
When it comes to the nitty-gritty of it, we lose out on the impact and the implementation.
Yes, you're right. You know, the approval is fantastic. Implementation is another thing. I know that work and meetings are going on to make sure that the implementation is done properly and differently. You know, it's not just the government. You know, the government gives policies, but when it comes to implementation, the private sector has to work with the government. You know, we need to put parameters in place because we are the ones on the field. You know, when you put all the policies in place, we are the one that will work it out. We are the one that, you know, recipient of the policies. So the private sector has to come together with the government. If you noticed, one of the things we told them for the Cotton and the Textile and the Garment Board is it has to be private sector driven. There's no economy in the world that you just leave the government without the private sector coming together, you know, that will work. So with this now, conversations are going on, meetings are going on, both with the government and the private sector on how to drive this. I'll say that the president of the Cotton Farmers Society of Nigeria, Chief Achimogu, was in a meeting with the SG to the president a couple of weeks ago to discuss on the board as well. You know, so what we're doing is that we're making the government understand that we have been in this space long enough to know what works. The politician cannot say this is how you're going to do it. We can tell you when the reason why we're putting the board together. We outline the reason why the board is necessary in the cotton and the textile space. You know, there's several reasons why the board is needed. One of the reasons is standardization, right? You know, I love the interview you had with the DG of NAFDAC just now. You know, she said quite a lot of things that resonate well with me. And she talked about our products being rejected in the global markets. One of the reasons why we have this board is because we don't want our product to be rejected anymore. You know, this cannot be done with the people in politics and government. It can be done by the private sector. So the first step, which is a fantastic step, is the fact that the board has been approved. The 98 billion, you know, it's not 98, I think it's a projection that when the livestock, you know, that thing is approved, you know, over a period of time.
It's agribusiness and livestock plan.
Yes, you know, and you can see the steps are being taken towards that. I'm not sure if I'm sure you are aware, you know, the agro-processing zone in Oyo State, that's part of it. That is African Development Bank coming with the government and the private sector to do that, because I had conversation with one of the team in African Development Bank. So it's steps in the right direction. Implementation is another thing. They're working towards it. They're talking. I said the last time I came, you know, we don't want to, it's not about complaining. It's about collaborating, coming together, and telling the government, let's work together to solve this.
And at the bottom of this is the cotton farmers.
Yes.
We know that insecurity is scaring farmers away from the farms now. Yes. So if we see that in basic crops, you know, edibles, then I wonder what's going on, you know, with cotton farming.
You know, it's a general situation and a general problem that we have, insecurity. The good side of it, you know, I'm not sure if that's the right word, is that, you know, we farm in the 6 geopolitical zones. There's some side that, you know, they have the height of the insecurity. I'm not sure if the right word is a no-go area, but they're struggling. There's some other places that the insecurity is not as bad. You know, as you said, that the difference between the other crops and the cotton farm is that the insecurity is not affecting so much in some areas, and the way we're growing it and the way that the cluster is put together, There's some areas that are protected from insecurity, like places like Ogun State and some other places in the north. You know, we've been able to work around it, but we're still having that discussion with the government. I know that they're having that discussion on how they can stop the insecurity and get the farmers going back to the farm to work. It's a big problem, but I know they're working towards it.
So please help us to understand the value chain from cotton to textile to the gate. Help us to connect it, you know, and help us to see how developed perhaps, because we do have the weakness of value addition to our crops, our raw materials, not just in Nigeria, on the continent, unfortunately. So help us to understand that cycle.
Thank you. You know, that's my area of specialty. You know, you saw me that I smiled. I love that, you know, the entire value chain, the backward integration. You know, way you can have an independent economy without having a back-to-back, you know, when it comes to production, processing and all that, you know, and you can only get value when you take your produce and you process. That's where you can get value. So the cotton value chain starts not with the cotton, not with planting, it starts with the seed. So for me, the 3 stages: the seed, the soil, agronomic practices, you harvest, then you start processing. So to have control of this value chain, you have to start with your seed. So you have the right seed, you have the right soil. In between, this training should be part of it, where the farmers are properly trained on how to plant. You talked about the yield. The lot of things that come together, you know, to have the kind of result that you desire. It doesn't just happen because we have farmers that are going to the field to go and farm. No, it goes beyond that. A lot of things comes together, you know, that makes it effective. So training, the right agronomic practices, soil tests, soil analysis. So in that value chain, you have the science as well, where you work with research, you know. So when that is done, you have planting, extension services, where they help the farmers and support the farmers in how to plant, what to plant, how to check as it's growing. Then you come to where it's properly grown. You have good yield because you have the right seed, you have the right soil. There's a lot of things that goes into getting the right soil, so we're not going to go too much into that. So you have, let's say, all things being equal, you have the right seed, you have the right soil, you know, good practices in planting and everything. Your harvest is done properly, you have your harvest. Your harvest, after harvesting, you take to the ginnery, which is your first stage of processing. Then when you get there, that's where you now separate your lint and the seed. You know, so when you separate your lint and the seed, that's where the journey starts. So you have some product from your lint, you have some product from your seed. So that's where you can decide, where do you want to start selling or do you want to keep processing? So the value chain goes on and on. So from your lint and your seed, you have different products before you now get to the one that we talk about all the time, the cloth. No, that's, you have a lot that happens, you know, different stuff that happens. Remember, you know, when we, under the CNN program, you know, I remember that, giving the farmers money to farm for them to produce the note, cotton for the Naira note. So that's part of it. So you have the sanitary towel and all that, the Pampers business, the stuffing, you know, you have the waste, the lint and the seed, you know, the oil and everything, before you now get to your actual textile. In the textile, you have the thread that they use in sewing, you know, the yarn and all that. You know, the way you get there, you have your towels, you have your bed sheets, you have your denim, you have your t-shirt before you start getting to all the Ankara, you have the fishnet, you have so many products. So you can imagine what we're losing. You can imagine how many factories that I've talked about. You can imagine the number of employment and empowerment that I've talked about when we go into the full vertical chain. You know, and even the ones that it's not really being talked about properly, where we talked about the R&D. So it's connecting the entire chain together, not each and everyone working in silos. That's where you can have a complete and an awesome industry. Even when you get to textile, even inside textile, there's diversification of economy in textile itself. But that's a topic for another day.
Yeah, so do you see this plan, this latest plan, at least even if it's half, 60, 70% of these potentials and these different parts that you're talking about, do you see bringing it out and making it a reality?
I'm seeing it. You see, the way we talk about it and the way people look at it, it looks like it's really difficult. It's a long, it's not rocket science. It's been done before. We're not going to reinvent the wheel. We're just going to build on what has been done. We have the structure for the cotton already. As I said earlier, that textile is an economy on its own. Nigeria can actually, this sector can uphold the Nigeria economy. It is that strong. The textile, the garment. When you look at statistics, look at how much different countries are making from the garment, from the textile, before you now come to cotton, right? So revamping the sector is for the benefit of Nigeria. It can be done. We have the structure for, for cotton already. We only need to build on it. There has to be a lot of training. That's why Nigeria have good relationship with Brazil now. On our side, in the private side, we've been working a lot. I've been working a lot with the Brazil economy. I'm working right now for them to come to Nigeria and start training the farmers. We have to do a lot of training. You talked about the statistics. Right now, I think the last, from what I checked, I think the last is about 30,000 metric tons that we did last, which has really gone down. During the Anchor program, we went to about 150 to 200,000 metric tons. Right, but our yield wasn't that good. But when we put in the training, soil analysis, soil test, the right seed, that start increasing our yield. So we now have to start going into quality before quantity. We've been doing a lot of quantity, but it's good. That gives us the structure that we can start building on. Then we now move into our textile. Once we get the cotton right, all those things, we start getting them right. Then we get to the textile, we decide to diversify into polyester and some other stuff, silk and all that, But it can be done. It's not difficult. We just have to really optimize what we have and start moving from there.
All right. Well, we hope. I hear you research, training. These are two things that stand out from what you said. Thank you so much. National Coordinator of the Nigeria Cotton Society and also Managing Director, House of Dockers Integrated Services, Ms. Ololade Adenoye. Thank you for your time.
Thank you for having me. Thank you.
All right, let's take a break now. When we come back, we'll jump on another conversation. Please stay with us. Welcome back. It's still Business Morning here on Channels Television. So while we talked about reviving the textile sector industry in the country, the issue of infrastructural gap, of course, plays a major role, which we keep emphasizing. So let's look at some statistics about Nigeria's infrastructural gap. We do know that Nigeria's infrastructural stock is 30% of the GDP. That's below the 70% benchmark that's recommended by the World Bank for emerging economies, one of which Nigeria is. Nigeria requires an investment of $100 billion annually if we are to close this gap. And over 70% of road network in the country is a poor solution. Rail, on the other hand, contributes just less than 1% to the transport sector of Nigeria. And NESG, that's the Nigerian Economic Summit Group, is worried about this, and they say they're going to focus on this during their summit. We have their chief economist right here, Dr. Olusegun Omishakin, to tell us perhaps they know how we're going to find this $100 billion Dr. Mishaki, good morning. Welcome to the program.
Good morning.
I think you have at least $100 billion in the venue of your summit.
I hope so. Good morning.
Good morning.
Yeah.
So how do we go about this? It's a common conversation in the country. It is glaring right there. Look at net rail, just 1%, and we know what that can do. An efficient rail system connecting different parts of the country and different types of, I know they try to do from the ports to the rail, you know, and all of that. We know what that can do to the economic activities of the country.
Yeah, thank you. I think this topic is very topical, let me put it that way. But, you know, we've been talking about this for years, and I think there's something we are primarily missing. There's a gap we are missing. It's not, first of all, about how do we get the money or the gap. It's also about the direction of the economy itself as a country. What's our philosophy about development? What's our belief? What was our orientation about development path? Infrastructure development will not just happen because we want to try and plan for it, or because we want the investors to just come. We need to have a philosophy that says this is how we want to drive the economy. For instance, hardly would you see any economy in the world that is not focusing on industrialization, then suddenly by luck they have infrastructure development. It doesn't happen. It's not what you plan, it's not what you put in the budget, it's not what you canvass for by trying to make sure that investors are coming. It is what you believe in. And that's why for years, for decades, we've been saying, oh, let the private investors come in so that they can develop this. For what purpose, right? So I think the most important thing is for us to look at the fundamentals. Do we have a national philosophy that says we want to be an industrialized nation in the next 5, 2, 3, or 10 years? And I'm not talking about national planning. I'm not talking about those documents that we always, you know, come up with. I'm saying attitude, you know, is it pro-development? For instance, look at the educational system. Are we structuring that towards making sure that people are growing towards developing the system? Look at China. China will not just tell you they need money to develop anything. You will see in their body language as a nation, right? So until we declare, if I may say, a state of emergency on a national philosophy about growth or development, we'll just be canvassing
but we have
people.
Some programs by the government that are supposed to give incentives to the private sector. We have the tax incentive, you know, where private sector companies can do roads and they get tax relief and things like that. Aren't those enough?
It's not by incentive. Incentives, we're not talking at the level of basic economic activities. You know, we have this reform, this will help the private sector. Yes, but we've been having these incentives year in, year, and nothing is really happening in terms of the direction of the economy. So what I'm saying is this. Look at the huge gap. So the question is, how do we get this money? And the question that will come after that is, why should a reasonable investor give us this money? We don't have the money from the side of the government. You know, that's our financial budget, you know, everything. Balance sheet is so not, you can't talk about that. So, but the most important thing, I believe we need to start, you know, we need to look into, which we are going to take a long time looking into during summit, is that as a nation, you know, industrialization is not by luck. It doesn't just happen that, oh, suddenly we just find ourselves, or we wish in the next 10 years we are good. It's a belief system. It's not by how much you are bringing in. It's a belief system. Do we really want, as a nation, want to compare ourselves in the next 10 years with what you have with China, India? Is that where we are going?
So how do we build this belief system?
Yeah.
We say the National Orientation Agency now, they have, I'm a proud Nigerian, I live by the, you know, the code and all of that. Are you talking of something like that? Or how do we instill this belief?
I mean, for instance, if you look at our labor market, we have more than 90% of our workers, labor force, in informal sector. that is a signal that we don't need, for now, we don't need those big documents. We need to look at what is happening there. Even for the orientation, how do we orientate people about the need for the role of STEM in development? You know, how do we make outside they are educated? The basis of development starts with knowledge, understanding, and that is education. If we have this current structure, look at JAM pass rate, look at WAEC pass rate, those are fundamentals. If we have this, taken care of as a direction, national direction, not just what we put in that budget year in year, national direction, then the issue of whether we are going to be industrialized, inclusive growth, or infrastructure, all these things will just, work out. So I believe so fundamentally that as a nation, we need to declare a state of emergency on the issue of industrialization. We are going to be rolling out this data year in, year out. And if we don't really ask ourselves, what exactly are we chasing after? Where are we going as a country in the next 10 years?
So where should this start from?
From all of us, especially, few of us are, in a position to influence that. And that's why we are doing this. That's why we've been having summits year in, year to influence the orientation, to let people know that we need to have a path that we're, going after. We don't need to just sit down and be saying we want to be like these people. We need to ask ourselves basic question as a nation in our governance, which is very important. How do we proceed from where we are now to where we desire to be? We need to look at the informal sector. And this part of informality is not about formalizing them, as it were. Informality exists because of structural problems. Education, I've mentioned that. The quality of skill, I've mentioned that. Vocational studies, we don't have that again. Technical schools and the rest that will drive growth. In China, you don't have many people with PhDs. Unfortunately, we have so many PhDs there doing nothing. You have them in vocational, they understand. It's a culture for them that you've got to be productive, right? Those are the things, the orientation that we need. And we know the finance is there, but if you don't have this set as a foundation, nobody will come from anywhere to want to invest in what now? Look at the roads we are building. Have you, one of these days, checked the road and see the culture of, maintenance? Poor. Because we are building roads, infrastructure, big infrastructure for people that we have neglected, that we've left them uneducated. They don't even see the value of the road. And so it's a matter of time, our culture in maintaining roads and big spending, we just erode the essence of that road building. So I believe so strongly that as a nation, we need to wake up and ask the fundamental question: what path are we? Where do we want to? What do we believe in this our vision? Do we believe the vision we are running with? And I think that's so fundamental. It's easier said than done, but it's what we must come up with as a nation.
Yeah, well, you sound like, really deep there, away from economics and all, but I guess all of this you will delve into and dissect at your summit.
Yep.
That's coming on. Thank you so much, Chief Economist of Nigerian Economic Summit Group, Dr. Olusegun Omishakin, for your time.
Thank you.
All right, let's take another break. When we come back, commodity space, and petrol and oil will be top on that conversation. Please stay with us here on Business Morning. Commodities time now on Business Morning, and we're doing this with Senior Manager, Financial Derivatives Company, Dumebi, Oluwole Dumebi. Good to have you physically in the studio today.
Yeah, good to be here.
Yeah.
Good morning, Ini.
Good morning. And you come with inflation projection. We're expecting that, I think next week, it's supposed to be about 15.
Yes.
So there's a projection from FDC that is going to ease to 21.79 from 22.22, which is where we are now. That seems like a major drop. Not so major, though.
Not so major. I think the important thing is just to look at the month-on-month trend as to why we even think, as to why inflation would likely decline. So between June and July, we've seen significant changes. So let's start with the commodities market in itself, where food prices are, declining.
That's because of harvest.
Yes.
So let's not celebrate it too much.
Because
it's temporal.
Well, it is temporal, but the truth is the numbers will reflect that. Right, the numbers are likely to reflect that. I mean, again, with food prices, we do know that there are a lot of factors, and food prices still account for the largest share of Nigeria's even revised inflation basket. So what that tells us that movement in food prices or even stoking factors or drivers towards food price movement will still be very prominent for us to watch. And seasonality is a very big part of that, right? So we can, when we mention the planting season and we look at the impact of that on food prices, we also need to take account of the harvest season and how that would impact food prices. So that is one thing to mention. Then within that period as well, that between June and July, we also saw, and this is the beginning of July now, we also saw petrol prices decline, right? So that would also impact the headline inflation number, and to an extent the month-on-month inflation numbers, because beyond even petrol prices declining, we also saw some marginal declines in diesel prices as well. And the reason why this is important is because diesel trucks are what we use to transport food across states in Nigeria. So a decline in, diesel prices would also have an impact on food prices. Then as well, you look at the exchange rates, right? The Naira has relatively been stable. The official market, even the parallel market as well, we did see an appreciation at the parallel market on a month-on-month basis. Between July and June, the parallel market has actually appreciated about 2-3%. And so what that means is that would also impact the imported food items, and then also that would also impact, the prices of imported food items, which are likely to also trend downward. So when you put all of those, together, we are seeing that there is that downward trend that would most likely be reflected in the inflation numbers. Not to say that there are not risks, especially because of the recent increase in, petrol prices that we're seeing, and the uptick in global oil price, and how that might keep domestic petrol prices up, keep the current upward trend sustained for quite a while. So that's a very potent risk that we also need to watch out for. I think another thing to also watch out for is the recent flooding in major food states, and how that might also significantly impact food supply even with the harvest season. So that's something that we need to watch out for in terms of risks that could, alter this potential downward trend in inflation.
And I guess it's also important to state that the MBS works with data from the second week of the month. Second week of the month.
First 2 weeks.
Exactly. First two weeks of the month. Exactly. So that's what they capture. Use. Exactly. And then still talking about the factors driving it. So we know Dangote is the market price controller in the country, and whatever affects the oil and gas, especially the pump price, also feeds into food and transportation. And so we know that his CNG trucks, that's supposed to start April 18th, I believe. I think this week he received about 4,000 of that. I wonder how long we would wait to see the impact of that. I mean, because it's supposed to reduce the cost, logistics cost, and that we see is supposed to also reflect. Hopefully, retailers will allow that to reflect. So I wonder how long we might have to wait while we celebrate the news for it to reflect in prices.
Yeah, I mean, it wouldn't be too far-fetched to still use the same 2 weeks to a month time lag that we have for when global oil prices increase, and then it also reflects in the domestic commodities market. It wouldn't be remiss.
Would it be 2 weeks or 2 months for global oil?
Well, it's between 2 weeks to 2 months.
Okay.
So the reason why it's between 2 weeks to 2 months, because sometimes you would have already purchased, most times. And then sometimes if the prices are too high, they could probably follow that trend just to make sure that they're able to break even, instead of getting more crude oil at higher cost. So they try to recoup that cost with the reserve, with the ones they haven't sold yet, so they're able to now purchase. So that's why I said 2 weeks to 2 months. So it happens within that time period. And so it wouldn't be remiss to say that that's almost how long we might also have to see and just watch the impact of the CNG trucks and how they would significantly reduce distribution costs and logistics costs, and then that now would feed into commodity price. And remember, right now, the CNG trucks are not for food, transportation. They're just for, transportation of the petroleum products. And so it depends on how that impacts the price of the petroleum products before we now see that trickle down.
So there's a long chain to wait for.
Yes, there's a long chain to wait for.
It's supposed to reduce the cost of logistics for the pump.
Yes.
So before they move from there to the products, and then from the products
to food prices,
to food and transport. That's another one. But you know, all of this we're talking about, Ghana is doing so well. We saw their inflation. I mean, we were shouting at how, you know, inflation hit 54% in December 2022. Now they are 12%, and their currency is looking good. Good news is coming from Ghana in recent times. I wonder what lessons we can learn from them.
Well, I mean, a lot. What we are seeing right now with Ghana is very strong moves with the federal government in terms of, number one, fiscal consolidation efforts, right? Remember, Ghana is coming from a period where they had defaulted on debt. They had to go through a whole restructuring phase. They were on with IMF programs as well, and they had to take the very painful path of, you know, reforms, not just on fiscal reforms now, but even also institutional reforms to ensure that the government's coffers are well buffed up, to ensure that they're able to meet up with, you know, significant payments that they had to make. That's one. The fiscal consolidation efforts are doing a lot. And then on the currency side, we also saw a very aggressive, you know, accumulation of gold reserves, right? And that has significantly supported the Ghanaian
Nigeria is
cedi.
also accumulating gold.
As a matter of fact, it is a trend across African central banks as of today. The Egyptian central bank is doing the same thing. South African Reserve Bank is also doing the same thing. Nigeria is doing the same thing. We're also seeing some of those moves even with Kenya and even with Morocco as well. So across Africa, we are seeing that trend, especially the top economies. We're seeing that trend of a strong, you know, demand and accumulation of gold reserves. And one of the reasons why this is very particular is because of, number one, we are seeing gold prices significantly increase because of the global uncertainty that we're seeing and the volatility in the US dollar, which most central banks of most countries have their foreign reserves in US dollar. So to show up against the volatility of the US dollar, they're accumulating gold. And what that does is just helps to balance, you know, their currency as well. And again, beyond that, it also somewhat supports investor confidence, because now investors know that central banks are not just relying on the movement of the US dollar to support how their currencies perform globally amongst other emerging markets. And with the improvement in investor confidence alongside positive real rates of returns, because right now across Africa we're also seeing positive real rates of return where central banks are still maintaining that, you know, tight monetary policy stance, whether by holding or by even cutting, you will still see that rates are still favorable, and so investors are incentivized both short-term and long-term. And on the long-term side, we're seeing that significant inflow of, you know, private capital into long-term investment. So from infrastructure, we're also seeing that with Ghana as well. And the inflow of that capital is strongly supporting forex inflows of the forex space, and also supporting, you know, the currency, and also then, you know, supporting the inflation environment.
Well, unfortunately, our own FDI, we saw capital importation capital, and it wasn't looking so good for FDIs. Even though for the hot money, the portfolio is about 92%. That's dangerous, because I mean, these guys can just wake up and up out of the country, and that creates a lot of. But anyway, let's be happy with what we have and work on that to get. Perhaps we have to accumulate more gold for our reserve. Thank you so much, Dumebi, for your time on the program.
Thank you for having me.
Let's take a break. When we come back, Ladi will be here to tell us what's going on in the global space. Please stay with us. It's the final stretch of Business Morning, and then we go global with Ladi Williams.
Yes, we're going global.
Again, just like yesterday. Thanks so
like
much, Eddie. Let's head straight to Europe now. That's more of the UK. Today, the Bank of England is expected to make its 5th interest rate cut in just over a year, easing the bank rate from about 4.25% to 4%. Let's hear more now from Juliana Olayinka, our London Bureau Chief, joining us via Zoom. Great to have you, Juliana. Good morning.
Good morning, Ladi.
So I know there are expectations of another rate cut at this time, but
Is there any chance of a surprise? Do we get consensus votes today?
Well, that's a really good question, and I don't think it's going to be a unanimous decision when the Bank of England meet at Threadneedle Street to discuss interest rates. So, but as you said, I think markets have definitely priced in that there is likely to be a 0.25 percentage point taking us down to 4%, and this will be the lowest level in over 2 years, and the first time in a couple of months that we've seen some movement from the Bank of England. Now, what this basically means is that if you've got a mortgage, particularly on a variable rate, you know, Laddie, over the past couple of years, mortgage rates have gone up and down, but with this interest rate later this afternoon, which we're expecting, this is going to knock off about £40 from your monthly payment. Now, that may not sound like much, but I think for families, this is going to be a huge sigh of relief, especially because we know since post-COVID, it has been mortgage holders that have suffered and kind of bared this brunt of the cost of living crisis. But of course, there's a flip side to that. And if you are a saver, then unfortunately, this means that your returns are likely to fall again. But of course, as you know, the UK economy is strained at the moment. The job market is slowing down. Wages aren't rising as fast as they should. And Rachel Reeves, the Chancellor, who was crying in Parliament just a couple of weeks ago, she is under significant pressure. So it's going to be really interesting to see what the central bank governor, Andrew Bailey, alongside his deputies, have to say about the economy today.
Right, it's like everyone's under pressure at this point, but definitely investors are going to be making a decision. How are markets and investors prepping, you know, today's trade so far?
Yeah, that's right. I think the FTSE 100 started off in a pretty positive performance this morning, as well as European stocks. Of course, I think, you know, interest rates are really on everybody's mind. People want to see what direction Britain is going in. But then, of course, you've got to weigh this up with what's going on stateside, which is, you know, those infamous tariffs, the Trump tariffs have come into effect for about 90 countries. And I was watching yesterday Trump alongside Tim Cook, the Apple CEO, talking about potentially imposing 100% tariffs on semiconductor chips. So there's so much to weigh, mostly geopolitical, but at the moment markets are higher, anticipating a bold move from the Bank of England at midday.
All right, we'll definitely keep watching out for that. Thank you so much, Juliana, for the update.
Thanks, Laddie.
And as Juliana mentioned there, we see Apple Inc. They unveiled a fresh $100 billion investment in U.S. manufacturing. That's over the next 4 years, bringing its total projected domestic spending to $600 billion. The announcement made jointly by Apple CEO Tim Cook and President Donald Trump at the White House addresses escalating trade tensions and tariff threats, particularly the looming 100% levy on imported chips and semiconductors, from which Apple could be exempted due to its increased domestic footprint. Take a listen.
This is a significant step toward the ultimate goal of ensuring that iPhones sold in the United States of America also are made in America. With the mass infusion of capital it's announcing today, Apple will also build a 250,000 square foot server manufacturing facility in Houston and invest billions of dollars to construct data centers across the country, from North Carolina to Iowa to Oregon.
That's a commitment we share at Apple, because American innovation is central to everything we do. Our products are designed here, we're hiring and growing here, and we support 450,000 jobs with thousands of suppliers and partners in all 50 states. Earlier this year, we made our largest ever spending commitment, $500 billion to the U.S. over the next 4 years. That's already yielding results. Earlier this year, we broke ground on a new factory in Houston to make advanced AI servers. And just last month, the very first test unit rolled off that factory's line, proudly made in America.
For the White House yesterday. And to other matters now, see, Maersk has raised its full-year profit guidance, citing surprisingly resilient ocean container volumes beyond North America. Despite lingering trade war headwinds, the global container market is now expected to grow between 2 to 4% in 2025, up from the -1 to up 4% range projected early in May. NUPRC posted second quarter EBITDA at $2.3 billion, a 7% increase over last year and surpassing analyst expectations, while revenue rose 3% to $13.1 billion. The company now projects annual EBITDA between $8 billion and $9.5 billion, up from its prior $6 billion to $9 billion outlook. CEO Vincent Clerc highlighted the firm's agility in shifting capacity away from weak U.S. import flows to stronger trade lanes, particularly in Europe, Latin America, and West Central Asia, Africa, and that's critical for its performance. And to the automobile industry now, Toyota Motor Corp has lowered its full-year operating profit forecast for the fiscal year ending March 2026, about 3.2 trillion yen. That's about $21.7 billion, down 16% from its previous estimate of 3.8 trillion yen. The decline largely stems from a projected 1.4 trillion yen hit, attributed to new U.S. import tariffs on vehicles and components, compounded by rising material costs and a stronger yen, despite maintaining strong global demand, selling record volumes in the second quarter and benefiting from hybrid vehicle trends. The automaker's North American operations swung to an operating loss of about 63.6 billion yen, driven by roughly 450 billion yen in tariff-related costs alone. As Toyota adapts to these headwinds, cost efficiencies and strategic investment remain central to its response. The company also confirmed plans to build a new factory in Japan in early 2030s, potentially cushioning longer-term impacts from trade volatility. All right, that's all we have on the global space. I don't know what gift you're packaging now for President Donald Trump. So next time you're going to the U.S., you don't have to pay for a bond.
So, Ladi,
just like Tim Cook did.
I know. So, I mean, we've seen Tim Cook do this, the promise of investments. We've seen the EU also do it. I wonder if it is safe to say that President Trump is actually hitting his targets, bringing in investment into the country.
Right.
Whether they're doing it happily or voluntarily or not, that's on another side. But the promise of investment into the United States that may bring, you know, manufacturing and jobs. Don't forget, somebody just lost his job because of a job report that didn't make President Trump. But I wonder if this could be said that President Trump is hitting the targets. That, you know, that I
guess we'll know once maybe Apple builds the factory in the U.S. and we see the cost of Apple phones after that.
And the cheap labor they're enjoying now in India changing.
That changes.
And then we'll see how many people will now be buying.
And I know you're an iPhone fan, so be prepared.
All right, Ladi, thank you. So just before we go, we'll tell you that the bull run is still on at the NGX. Yesterday, we hit another new record. We went from 144,000 to 155,000, and then that's 0.72, more than 0.5% up, getting close to 1%. The market cap closed at 92.25. Top gainers, Core, HM Core. Remember, insurance guys are really on fire this time around. I think they're on full beat at this time. But insurance, following that new law from President Bola Tinubu, insurance stocks, they may no longer be called penny stocks at the end of the day. We'll see what happens intraday today. Ladi will be here to give you the stories on that. I'm Ini John Mekwa, wishing you a good rest of your day.